This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple. Let's dive in.
Welcome to the Deep Dive. We are your guides from IUX Education, here to unpack complex ideas and make them crystal clear. Today, we're diving into a really crucial topic for anyone just stepping into the world of trading: how to pick currency pairs to experiment with.
Yeah, it can feel a bit like walking into a massive library, right? And someone just says, pick a book. Where do you even start? We're here to help cut through that initial confusion, maybe offer a clear roadmap for making smart choices, right from the beginning.
That's exactly it. Our mission in this deep dive is to pull out the most important bits of knowledge from our sources, give you a shortcut to being well-informed, maybe with a few surprising facts, perhaps just enough humor to keep you listening. So let's get into it.
Okay, so when you're just starting out, the absolute best place to begin, really, is with what we call the majors.
Mm-hmm.
These are the heavy hitters, the most traded currency pairs globally, and they all involve the U.S. dollar. Think pairs like UOSD, that's the euro versus the U.S. dollar, or GBP-USD, the British pound against the dollar, also USD-GPY, the dollar against the Japanese yen, and USD-CHF, dollar versus the Swiss franc. These aren't just any old currencies. They're kind of the bedrock of the Forex market.
Right, but hold on. I've seen lists with hundreds of pairs. It feels overwhelming. So what's the biggest mistake, like the main trap beginners fall into when they just pick one randomly? And how do these majors help avoid that specific trap? That's a great question. Yeah, the biggest trap is often getting caught in something with no activity, low liquidity, and facing high costs. But with the majors, there are basically three key reasons they're always recommended. First, incredibly high liquidity. And here's where it gets really interesting. Think about trying to sell, a rare antique. Would you go to a tiny village market that's open once a week, or a huge city market that's buzzing 24/7? High liquidity is like that city market. Always buyers, always sellers. It makes it super easy for you to get in and out of trades whenever you need to. And crucially, at a fair price, you're basically never stuck.
Okay, so it's about smooth entries and exits, being able to act fast.
Mm-hmm.
That sounds, vital when you're still finding your feet, right?
Exactly. And building right on that point, the huge amount of trading, the high volume, generally means lower trading costs. We call this the spread. It's just tighter. And that's fantastic for practice because it means your transaction expenses are minimized. Thanks to a lower fee each time you trade.
Lower costs, easy in and out.
Okay.
And the third reason?
The third is simply the sheer amount of information available. There's just a massive amount of news, analysis, educational stuff focused specifically on these major pairs. This wealth of info makes it so much easier to learn their, let's say, unique behaviors, how they react to global news, what their patterns look like. It's kind of like having a super detailed user manual for your first car, instead of just being tossed the keys and told good luck.
Gotcha. So if I'm hearing you right, starting with the majors is like learning to drive on a big, wide, freshly paved highway. Before you even think about tackling some twisty, narrow mountain road, it's about stability, lower costs, and plenty of signposts and support. That actually makes a lot of sense.
Right. Now, another thing. While the Forex market famously runs 24 hours a day, 5 days a week, it's definitely not always equally active. Activity really spikes when different major financial centers overlap, think London, New York, Tokyo sessions.
Okay, but let's be real. A lot of beginners, maybe they just check the charts when they have 5 minutes free between other things. Is that actually a bad strategy? Or can you genuinely find opportunities any time of day?
That's a really common thought, but yeah, it can lead to some frustration. Ideally, you want to choose a pair that's active when you are available to trade. That way you're practicing in, more realistic market conditions, more representative conditions. For instance, if you mostly have time during the Asian trading session, then pairs involving the Japanese yen, the JPY, or maybe the Australian dollar, AUD, something like AUD, JPY perhaps, those will be significantly more active then. You'll see more happening.
So you'll actually see more movement, more chances for whatever strategy you're testing to play out properly.
Precisely. Yeah. And on the flip side, if you're active during the London-New York overlap, that's generally the busiest time globally, then pairs like Euro USD and GBP USD. They'll have the most volatility, the most volume. Trying to trade a pair that's basically asleep during your available hours, it's kind of like trying to learn surfing when the ocean's totally flat. Not much is going to happen.
Huh. Okay. So it's not just what you trade, but when you trade, it matters too, especially for meaningful practice. being where the action is, basically.
You got it. Now, there's another common mistake beginners make. They try to watch like 5 or 10 different pairs all at once. Honestly, it's just a recipe for confusion. Total information overload. So what does this mean for actually making progress?
Wait. But isn't the idea to learn? Shouldn't I expose myself to as many different things as possible? Why would limiting myself actually be a good thing here? Isn't that counterintuitive?
That's a fair point, and it feels counterintuitive. I get that. I remember thinking the same thing. More data, more pairs, more insight, right? It felt like trying to juggle 5 tennis balls at once. Spoiler, I dropped them all. Instead, seriously, pick 1, maybe 2 pairs from the majors and just focus. Concentrate solely on them.
Right.
By doing this, you really start to learn the unique personality of that pair.
Personality. Okay, that sounds interesting. What does that actually mean? Like, in practice, what does a currency pair's personality look like?
It's actually fascinating. You start to understand how it reacts to specific news, like interest rate announcements or employment figures. You get a feel for its typical daily range, its volatility. You begin to recognize its common price patterns. And, some pairs have quirks. Did you know, for example, that USD CAD, the US dollar versus the Canadian dollar, is often heavily influenced by oil prices because Canada is a major oil exporter. So it might behave quite differently from, say, URUSD, which might be more sensitive to interest rate differences between Europe and the US. Understanding that specific sensitivity for your chosen pair, that's a deep insight you won't get by just glancing at 10 different charts. This focused approach, this deep understanding, it's far more valuable than just having a shallow knowledge of lots of pairs. It builds a really strong foundation. And here's the thing, using something like the IUX demo account, it's the perfect place to do this kind of focused learning without risking any real money.
Okay, yeah, that makes sense. But thinking about it in real life, for our listeners, what does this kind of disciplined focus really give you? It sounds like it's not just about knowledge, but maybe about building confidence and discipline itself.
Absolutely. It really teaches you patience. It teaches you the value of deep observation, careful analysis, and honestly, those are probably 2 of the most important traits for any successful trader in the long run. Patience and observation. Okay, so let's quickly recap our deep dive today. First, start your trading journey with the major currency pairs. Why? Stability, high liquidity, lower costs. Second, try to align your chosen pair with your personal trading schedule. Practice when the market for that pair is actually active. Makes your practice much more realistic. And finally, focus. Master just 1 or 2 pairs initially. Really get to know their unique personality before you think about expanding.
Yeah, it's all about building that strong, practical foundation, isn't it? Doing it without getting totally overwhelmed and actually building some real confidence as you go.
Exactly, which actually brings up an interesting question to think about. If understanding a pair's personality is so key, how might that insight need to evolve, as global market conditions inevitably shift over time? And how would you adapt your focus then? Something to maybe mull over until our next deep dive. And speaking of which, next week we'll be tackling a really, really crucial topic. Is risk management more important than strategy? And of course, if you want to follow up or know more, you can always follow IUX Education.
That's right. We've got loads of learning materials, articles, and, more deep dives like this one available for all traders.
Definitely check those out. And don't forget, we'll see you again next time.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.